Okay, looks like we're live. I'm still waiting for Clive and Rafi to come on the live stream, but I guess we can start talking and having a chat. I was already replying to some of your comments. If you're watching this recorded, you might want to jump forward 5 minutes. I usually start a little earlier than usual and just to have a chat with everyone. The title today is Only Sound Money Can Restore Peace and Prosperity to Our Chaotic World. And it does sound idealistic and utopia-like, I guess, but I don't think it is because the world has been under sound money system before, and even though it doesn't mean the world's going to be perfect, I think it was a lot better than it is now. But anyway. Uh, yeah, nice to see all of you here. Let's see. Belly Dance Rabier's here. John 14:6 is here from Northwest UK. Jake's Custom Parts. Andrew Bevan from breezy, cold South Wales. Today it was breezy here too and a bit chillier. Tomorrow it's going to be nicer. It is a what they call a bank holiday here tomorrow. It doesn't usually matter to me, but I've decided to go and play golf again tomorrow. We have a swindle very early on 7:30. So I'm gonna take the morning off tomorrow, and I won't be making my usual video on Monday. I'll probably make it later on in the day. Um, yeah, but anyway, Michael Kennedy's here, Cypher, Darren Smith, Michael Church says the world needs more leaders and way less liars. I don't think we have many leaders, Michael Church. Anna Comina says bonsoir à tous de Monaco. Well, she's in Monte Carlo or Monaco. Nice tax haven, but very expensive to live there, I would say. Nice place though, if you like gambling as well. The casino. Dutch Libertarian, I said hello already. Alan P. Hot Springs, Texas. Ronald Warman. Andy Lee from Italy. Noah Good from Stockholm, Sweden. I was invited to go to the what's it called? Nomad Capitalist event in Malaysia, but not this September, but next year. So I'm looking forward to it. I've never been to Malaysia. Your life jacket first, from the Soviet Republic, Soviet Kingdom, isn't it? Of Great Britain. Dilwyn Roberts, Darren Smith, Rafi is here. Let's admit him on. Homestead Aquarius. Hi, Rafi.
Hey,
How are you?
I am calm. Yeah, I'm calm.
Good. I mean, I read a book years ago, I think when I was still in school. It was about an Israeli plane that was hijacked, I think, and I think it was somewhere in Egypt, or I don't know where it was. And
And about me, you're talking about Operation Entebbe?
yeah, yeah, I read the book, and it's interesting.
Uganda.
Yeah, and it's interesting how um, they didn't panic, the people, that were hijacked, and they kept doing everything that they needed to keep normal. And I think that I feel that you're a bit like that. So that's a good thing.
Oh, well, thank you. That operation is essentially why Netanyahu is prime minister.
I see. I
That's
see.
how his brother was killed in that operation.
Okay.
He
Okay.
became famous that way.
I see. I see. So, are you okay? Or how are things there?
Yeah, I'm okay. Is it just you and me, or is Clive coming on?
Yeah, he's coming on. He should be
Okay.
done. Yeah, and the title of the live stream, Rafi, is Only Sound Money Can Restore Peace and Prosperity to Our Chaotic World, which is kind of what you've been talking about. So we can go
Yeah.
over that when Clive comes on. Uh,
Yeah.
yeah,
So yeah, I'm okay. I could have not been okay,
yeah,
but I'm okay. There were there this was on Wednesday. Something else happened today. We had to go to a bomb shelter at like 4:30 in the morning. I didn't have to, but I'm sure you've heard the news that there was a preemptive strike by Israel on Lebanon, where Hezbollah was setting up a whole bunch of rocket launchers. And again, I don't necessarily believe everything that comes out in the media as they report it. I'm just reporting what the media says. And I definitely heard a lot of action in the sky in the morning, and my house was shaking from the jets.
yeah,
So I woke up, my wife and my kids just got back from the States. So woke them up, and then we went to the bomb shelter, which is 2 houses away from me. We just like hung out there until the plane stopped.
yeah,
Yeah, but on Wednesday we were my street about 30 steps away from my house was bombed. The chances of that actually happening, I didn't think this would actually happen, but it did. That it's a small city. I live in a small city, but the physical area of it is pretty large. So you
yeah.
know,
I saw that you were pointing out glass from your window.
yeah, yeah. A piece of shrapnel hit my bedroom window.
Yeah,
I wasn't home at the time. I was at synagogue.
yeah,
My wife was home, but our procedure is we go downstairs
yeah,
because at least the first floor is concrete. The second floor is like drywall and
yeah.
whatever, you know, simple building materials. So we go downstairs into the center of the house. That's what she did. So that and my car was damaged, and my neighbor's house was completely shredded.
Was he? I
And
guess he wasn't in there, was he?
he was at home, yeah.
But
He was at home. The shrapnel was big enough to break windows. It wasn't big enough to get through concrete walls.
all right.
So his house is just pockmarked with shrapnel marks all over the place.
Mm.
And cars were destroyed, property. And his when I got back to my street, the his water pipe had burst, and it was just like jets of water going all over the street, and I didn't know what was going on. So I
Yeah.
just wanted to make sure my wife was okay, and she was. She was a little just freaked out, but she was fine.
Hi, Clive.
Good evening, Mario, and good evening, Rafi. I just caught the tail end of that from you, Rafi. I hope you're all right. I hope your family are fine. It sounds like you're having a pretty rough time of it at the moment.
No, it's not rough. It's just unnerving. I can't call it rough. We're okay.
That's good. I've got a question here. Uh, it's from H Man. You've mentioned previously that property is going to go up in price, so it is better to invest in property now or gold. Thanks. Um, I've spoken about the average house price to gold ratio in the UK, and the highest it's been was in 2004 at 100. You needed like over 400 ounces of gold to buy the average UK house. Right now, we're down in the hundreds. I haven't checked. The level is around 140. What I think they're going to try to keep doing is uh, keep housing elevated. They're going to help people as much as possible because the government needs high house prices here because our banks are all like they've got a lot of mortgage assets that are related to mortgages that people take. So if they let housing collapse here, it will be a really bad thing. It's part of keeping things going here. But what I think will happen, yeah, housing will go up in nominal terms, but in real terms versus gold, I think it's going to continue to go lower. The lowest ratio since 1953 was in the early 80s. You needed 90 ounces of gold to buy the average house price. So
Yeah, I have the chart up here. If am I allowed to share?
yeah, let me hold on. Let me where is it? Share. Yeah, go ahead.
Okay, so yeah, you can keep talking. I'm just grabbing the chart
Yeah,
here.
so that's what I think this time around we could see the ratio go even below 90. Yeah, there you go.
Yes, here you go. Since 1950, in 1950 was about 100, 120 ounces or something,
Yeah,
and
sorry,
now it's 155. But yeah,
yeah,
the housing prices haven't changed much.
yeah. But I think, it's been kept up for quite a while now that if you look at that top, I think we're going to go below the early 80s low there around 82.
Yeah, here's the U.S.
Yeah,
So
yeah,
U.S. housing prices are way down
yeah,
since the 1960s.
yeah. And Clive, just maybe we can talk about this now, and then we go into the topics. The title of the live stream is Only Sound Money Can Restore Peace and Prosperity to Our Chaotic World. I'll let Rafi chime in on that because I got the inspiration for that title from him.
Oh, well. Someone who's I get I'm in a war zone now, literally. I don't know when I have to run to a bomb shelter. There's a war going on, and I'm forced to root for my side, obviously, because I don't want to die. So I can't be faulted for that. So I'm rooting for the Israeli government. But does that mean that I say that they're not guilty of being part of this? I'm not saying they started the war. I'm not saying that. But I'm saying we're part of a money machine where the United States uses us as to grease the wheels of its defense industry by giving us USA dollars that we spend on American weapons so they can keep their military industry churning, right? At the same time, they can test weapons while we use them. And it sounds good for us, but I don't want that. And it generates anti-Semitism for understandable reasons. And it's not, I can't really argue against it. But the other side gets weapons also, not as directly, but what does Iran use to fund its weapons? It uses dollars, and you could say whether there's deals going on where the Iran gets dollars. We know that during the Cold War, the USSR got direct aid from America. So the channels where the dollars get to Iran are a little bit more convoluted than us, which is more direct. But basically, it's them throwing dollars at Iran and them throwing dollars at us, and then us fighting.
Mm.
And unfortunately, we're in a war and we have to win it, but we're stuck. So when the dollar dies, the weapons will stop on both sides,
Yeah.
and then when we fight and we throw bombs at each other, we'll have to spend our own money instead of somebody else's, and then that'll make the war end by either somebody winning it and somebody losing it, or just both sides stopping.
Yeah, I agree. And just before Clive chimes in, you talked about that the U.S., Iran and Israel, they get dollars from uh, whoever it is, and this is a great book here, The Tower of Basel, about the Bank for International Settlements. And you said that the US funded the Soviet Union, and it's true. And even during World War II, the BIS, they had people from the German central bank still working there. They had people from the Bank of England, the Bank of France, the Bank of Italy. They had someone from an American banker. He wasn't from the Fed because the Fed wasn't a member yet, but they were financing both sides, the central bankers. And unfortunately, it's all about blood money. They make wars are very profitable. So I'll stop here, and I highly recommend this book. And we're going to look at some more books about central banking a little later on, and let Clive chime in about.
Just one
Wars.
more thing. I did read that book on your recommendation, and really, it made me nauseous. It made me want to throw up. It's tough to read.
Yeah,
I think it's going to be very hard to get rid of wars. We've had wars ever since the beginning of time, and uh, countries will always seem to somehow hate their neighbors and be jealous of their neighbors. But my question would be this: if wars had to be financed by sound money, i.e., by paying for the weapons in gold, would they be bigger or would they be smaller? And I think the answer is this: if the government didn't have the money, if the governments, those who are warring against each other, didn't have the money, those wars would finish more quickly because they wouldn't have the money to keep it going. And that applies to both sides. It doesn't mean to say the outcome would be the same as it is if you've got a lot of money. So if one side today has got a lot of money to throw at weapons and the other side doesn't have so much, it's the one with the most weapons who's going to win. But I don't really agree with my tax dollars being spent on fighting other people's wars. I don't think that's a good idea for me.
yeah, Clive, you said that. Yeah, it's very hard to fight a long and big war with sound money. And I was reading this article here about hyperinflation in Germany, and it's from the American German Institute. And it's interesting because it says here Germany's assets at the beginning of World War I in 1914 would have been sufficient to finance only about 2 days of the war. And I think this applies to apply to every country, and that's why they dropped sound money, and they always do. They did it during the Napoleonic Wars as well. So we can get rid of that.
I think Napoleon insisted on maintaining a gold standard throughout his wars because he
Yeah.
was so against fiat money. He wouldn't do it as a religious
Yeah.
principle.
The British though they went off gold in 1797 up until I think 1920 sorry until 1820 they went back. Yeah, and Napoleon I think he got a lot of the gold to finance the war by selling the Louisiana territory that France had. That was the Louisiana Purchase. I think it was Thomas Jefferson who was
Yeah.
president, who I think they paid 7 million or 14 million dollars in gold. So I've got a super chat here from the Ken. Thank you. And he says, can you read that, Rafi? Can you see the chat? Maybe you, because I don't understand it.
Chat. Is it Hebrew? What?
I don't know.
I don't
Yeah,
see. I
don't know
don't
what
see
language that
anything.
is.
Lech Bishalom Utie Bari. I don't know what that
It
means.
says, "Go in peace and be healthy."
Okay. Thank you. How is my
Your
pronunciation?
pronunciation was understandable to me as someone who has understands American accents, or at least Western accents generally.
Okay. Um, what else? Oh, so this is, yeah, I'm sorry this book made you feel nauseous. There's some other ones. There are some people before I went live, they were talking about this book here, A History of Central Banking and the Enslavement of Mankind. This is a good one too. I think this guy, Stephen Mitford Goodson, he used to, I think he's passed away recently, but he was on the board of the South African Central Bank, the Reserve Bank. So I recommend that too. Uh, I recommend Eustace Mullins, The Secrets of the Federal Reserve. Rafi, have you read this one?
No, I haven't.
Yeah, this is pretty good. I think, the original guy who started looking at the Fed was Eustace Mullins, and then G. Edward Griffin. That's more of a famous book. And yeah, and then Ron Paul's and the Fed. That's
Yeah,
pretty,
that one I read. That one's more pop, like
yeah,
for lay people.
yeah. So, question, I wonder when people stop paying tax and debt based on Ponzi. Well, I think people stop paying tax when we go into when we start seeing more inflation, maybe even hyperinflation, because the government will, yeah, the currency will be worthless. But right now, I think it's difficult to convince the general public to stop paying tax. What do you think? How do you see it, Clive?
I think most people would like to pay their taxes. Obviously, nobody likes to pay as much taxes as they're paying, but everybody I speak to says I'm all in favor of paying my fair share. But if taxes become too high, then people are going to up sticks and leave the country, as happened in the 1960s in Great Britain, when the tax rate, or the basic rate of tax, was put up to, I think it was 93%, and then they had a 15% investment income surcharge on top.
Yeah. Oh,
I lost you for a second. They had a 15% investment income surcharge on top, which brought the tax rate up to over 100% for the highest taxpayers, especially those who had an investment income. And obviously, the inevitable happened. Many people literally upped sticks and moved to America to get to earn some money without having to lose it all in taxes.
What does
Rafi?
that even mean, 100% tax rate? Like what? That
Well,
doesn't even make sense.
it's not on the whole your whole income, but let's say you earned $100,000, uh, from 80 to 100, they would, I think it was the top rate was 90%, and then they had taxes, other taxes on,
It's
I
called
don't
the
know.
investment. It's called the investment income surcharge, which meant that if you had investment income as your main source, that investment income will be taxed at 105%.
Wow.
What country was this? Switzerland?
UK.
UK, yeah. Okay.
Yeah. And so Rafi, what do you think? How can we I mean, I think Peter Schiff's father was a tax not paying your tax advocate, but it's
Yeah.
very dangerous, isn't it, still right now?
Yeah, well, Erwin Schiff decided that his principles were more important than his family, and most people are not going to pick that. I'm not going to pick it.
No, I'm
Uh,
not either. Yeah.
I'm not going to choose the path that Erwin Schiff, and if you hear Peter talk about his father, I mean, he loves his father and he's proud of him for what he did, but he also partially resents him for pretty much abandoning him for
Hmm.
for the purpose of not paying taxes and spending his life in prison. And I can't blame him for that. So I think the simple answer as to when do people stop paying taxes and when the government no longer cares about collecting taxes because the currency is worthless enough that the efforts to pay taxes cost more than the efforts to collect taxes cost more than the taxes themselves. And that's the end of all hyperinflation.
Yeah.
And that's the inevitable end of all currencies. So when consumer prices rise at a fast enough clip, then the government just stops collecting taxes because they'd have to arrest the entire country, and then that means that they can't collect anything. That's exactly what happened in Israel in 1984. There was hyperinflation, and then people stopped paying taxes, and everything was reset. That's again, that's that people talk about the Great Reset, but the Great Reset is the hyperinflation. It's the same thing.
Yeah, I've looked quite a bit at government spending as a percentage of GDP, and I'll bring it up here. One second, because it's quite interesting that well, hold on. Where is it? Here we go. Uh, I was surprised because everyone talks about Venezuela being communist or socialist, right? But this is government spending as a percentage of GDP. So you've got the UK here in the 1800s. It was mostly below 10%. Government was fairly lean. And you look at in the US, it was like below 5%, a lot lower. But then I looked at Venezuela. Look at it now; it's like 10.93%, and I and I thought, that doesn't seem to be a government that's interfering or spending that much. So I think that's the problem there, that they've run out of they, like Rafi, like you said, they can't really collect taxes because the economy is in such bad shape. That's the only hope we can have. But Clive, we can talk about this in a second. But if you want to survive in such an environment, you're going to have gold and silver. But let's quickly look here at some countries like France. Look at France, 62.4%. Finland, 56%. Greece, 58. Italy, 57. Germany, actually, yeah, Germany 51. So is it any wonder that the European economy is in such bad shape? The UK as well, 50%. US 46. So, Clive, you said you wanted to talk about uh, silver and the best way to buy silver coins and bars.
Yeah, first of all, but I just wondered if you'd seen Jerome Powell's speech on Friday night and what you
Yeah,
thought of that.
I saw that. It was fairly short, wasn't it? And one thing that I thought was pretty, it was like he was almost joking about things. And here it is. I remember he said, because someone tweeted this out, because I thought it was in pretty bad taste. Um, because he said the good ship transitory was a crowded one, meaning that all the people that said inflation were transitory, which was all these Muppets, the central bankers, they were wrong. But when he said that, everyone laughed as if it was a joke. And I saw that Fix the Fed said, as he points the inflationary cannons at us again, Powell showed his true callous indifference for the plight of Americans ravaged by rampant high inflation he has caused for years, surrounded by his sycophants in gentrified Jackson Hole, the platitudes and fake concern fall away. So yeah, that's what I think of it. And it looks like well, they want to inflate again. And despite that, the CPI index itself is at all-time highs. So it's going to get worse. I'll let Rafi
Yeah.
chime in and then Clive.
Well, so what I read into the speech was that basically he admitted that the employment numbers, which they've been relying on to prove in his eyes that the economy was robust, weren't nearly as strong as they had been, because we've got the new numbers just come out it's only up until the 31st of March, but they show that nearly 1 million less jobs were created than they'd been claiming. And of course, Jerome Powell had been relying on those robust numbers to justify his high interest rate stance, because the economy was apparently robust. And so he actually openly admitted that the employment side was nowhere near as strong as he'd previously been thinking. And I think literally everybody who heard his speech took everything that he said as a virtual guarantee that they're going to reduce rates in September. And the debate is still out whether it'll be 0.25% or 0.5%. Personally, I'm going for 0.5%, but I think the majority still think it'll be 0.25%.
Rafi, did you listen to that?
No,
How?
I did. My mind's been on other things lately.
Yeah, I know. Have you read what went on there or not?
That he spoke. I read that Jackson Hole happened, and that they're probably going to cut rates in September. But I think we already, all of us already knew that.
Mm,
Um,
yeah.
The
I,
markets, everything rallied strongly on that because now there's a certainty of lower interest rates. That makes it
Yeah.
easier to own equities or bonds or gold for that matter.
Yeah. What I would add is, I mean, it depends when the next financial crisis hits, and when it does, we're going to go straight back down to zero.
Yeah,
But
could be.
it's I mean, it's just a matter of math.
Yeah.
There's so much, there's all these reserves that are being used for overnight bank funding, and it keeps growing because a lot of the dollars are double used to fund short positions and different basis trades that's
Mm,
going on right now. And if you look at the COTs on the futures for treasuries, the amount of shorts on treasury notes and all the maturities, 2, 5, 10, and 30-year bonds are all at record highs, all of them. And they
mm,
keep getting deeper and deeper and deeper every week. So there's more and more repo money that's being used to fund these things. And meanwhile, the amount of dollars that are available for repo funding keeps getting less and less every week because quantitative tightening is ongoing, and you can't have this keep at itself permanently because it's two trains going in the opposite direction. I keep saying this. So
yeah.
eventually it's going to cause a crisis, and then the Fed's going to meet that night and they're going to say, we need to fund the banks right now. We're going to cut to zero. And then gold is going to go just whoop, and
Yeah.
everything else is going to go up too.
Yeah.
But gold's going to go up. Gold and silver especially is going to go up the fastest.
This is where I've got the S&P chart here from 2007 to around 2009. And the Fed actually cut rates on September 18th, 2007, which is this week here. And the market rallied that week quite a lot. And then the next 1, 2, 3 weeks made a top beginning of October. And from that top until the bottom, uh, in March of 2009 at 666.79, the S&P dropped 57%. So a lot of people were saying the last time also in 2001, the Fed cut rates in 2001 and the market dumped. In 2020 as well, they cut rates and the market dumped. So a lot of people are saying that it doesn't necessarily mean that things are going to be rosy. But looking at this, we could go up for another week or two or even three, and then we could have a crisis because I think the markets have been they're the ones who push the Fed to say we're going to cut because the Fed doesn't lead, they follow the markets. Do you agree with that, Clive?
Usually the Fed is following the market, and as they say, they're data dependent, so they wait for the data and then they make their decision. Yeah, and I think at the moment we seem to have got a Fed put at the moment, but as you pointed out, Mario, there's been numerous occasions in the past where the stock markets have gone down shortly after a Fed cut. And the question is, why was the Fed cutting? Well, the Fed was cutting because it saw dark clouds ahead, and that obviously turned out to be true because then the stock markets went into decline because we're heading into recessions. Uh, will it be like that this time? Well, obviously the numbers as we've learned this week from the employment numbers haven't been nearly as good as people have been led to believe over the last 2 years. So yeah, it could well be that we're about to head into recession. I don't know. I don't see it myself, but the numbers are starting to not look as good as they used to.
Yeah, Rafi, any views on that?
Yeah, well, what did I see recently? I think it was from Wolf Richter. It was looking at the inventory of housing, and it's starting to we're at the highest housing inventory in the U.S. since 2009. It's nowhere near the highs in 2007, 2008, which caused the housing crisis. But those finally housing is starting to there's a buyer strike. It looks like the Keynesian fueled economy is slowing down, and this is all inevitable, especially when the stealth QE that has been ongoing since 2021 stops. And by stealth QE, I mean the backup of dollars that were printed when that runs out, and they enter they enter the monetary system through treasury bills. But when there's no more when there's no more of those reverse repos to fuel the Keynesian bubble, then everything will crash and we'll have that, depression that they'll need to print in order to reverse. And I see this all coming to a head in the next few months. At least I hope it's within the next few months. We have a U.S. election that's happening around the same time, and we have the whole RFK thing, and now he's joining Trump. So we have all these huge tectonic shifts going on, where it seems that so many people are waking up to what I see as the final bastion of liberty, which is freedom of speech, which is under attack. Almost nothing else matters in relation to that, because once you can't say what you want to say, you lose everything. And we're feeling that. You're feeling it in the UK. I'm feeling it in the US. I don't know what's going on in Switzerland. There's gag orders in Israel about what's going on in the war. I don't really know what's going on. There's no freedom of information here. So everything's coming together at some big point in the next few months, I see. And a Keynesian slowdown is just one small piece of that puzzle.
So you don't think they'll, I mean, when things implode in a deflationary crash, uh, I'm sure they won't let that be for too long, and they'll come out all guns blazing and like printing and borrowing like mad.
Yeah, but this time it's not going to work, I don't think. It's just going to lead to hyperinflation, and then it'll
Yeah.
be the same deflation, except the only difference between deflationary depression and hyperinflationary depression is one deflates in terms of dollars and the other deflates in terms of gold, but it's the same result in the end.
Yeah.
I agree with Rafi. I think high inflation is a real possibility. We might well go into a hyperinflation situation. These things are not exactly in the control of the government. It's at the end of the day, if there's a loss of confidence in the currency and the interest rates start to spiral out of control, the central banks will be forced to print and print and print in order to buy and finance the governments who are now suffering from increased deficits because of the recession, and that would exacerbate any loss of confidence in the currency, causing it to, basically causing people to rush down to the shops to buy anything that they can, anything which is durable. And clearly, long-term assets like gold will do very well out of that. So we were going to talk a little bit about buying silver, Mario, and I wanted to just sort of, this bit is for the people in your audience who are interested in silver. They might have bought silver, they might collect silver coins. So I just want to talk through a little bit about the types of silver you could buy and why you might choose it. A lot of the people who listen to your show fear that we might have a currency meltdown, as we just discussed, a hyperinflation, and maybe at some point in a war situation or a civil unrest situation, nobody's willing to take your fiat currency. What sort of currency will they take? Well, for sure, in each country, they're likely to take the old coins of the realm. These are so in Switzerland, these would be coins prior to 1967, which are in silver. In the UK, I think it's prior to 1947. I don't know what it is in the USA or Israel or other countries, but every country had a cutoff point up until which their silver coins were real silver. I'm looking at some nice pictures there of silver coins from you, Mario. That's lovely.
Yeah, that's a bit of my old silver coins like you're talking about that you might need. So I've got
So
yeah.
So my message is, if you fear that we might go into this crisis, or even if you think it's a possibility, I think it's a good idea to have a stack of these coins somewhere tucked away in a drawer. In almost every country, it's possible to buy them by the kilo. The question is, what are you going to pay? Well, it's quite simple maths. You work out the silver content of the coins, and then you know what a kilo of those coins would be worth. And then you can, based on the price, and then of course you have to adjust, because in some countries they'll charge you taxes or there'll be a markup. But obviously you want to buy this as close to the silver price as you can possibly get. And so I'm going to talk in a minute about different ways to buy different types of silver, but I'll just move on to the next thing, which is very popular, those are what's known as the silver bullion coins. So these would be coins which are mass produced, such as the silver Krugerrands, such as the Austrian harmonicas, the Armenian Noah's Ark, the UK Britannias. For example, in America, what would that be? The silver coin? You might know, Rafi. I don't know.
Silver Eagles.
Silver Eagle, yes. So, and the Canadian maple leaf, of course. So these are all coins which are mass produced, and you should be able to buy them as close as possible to the silver price. Now, that doesn't mean to say you're paying the silver price, because they'll always have quite a premium on them when you buy them through a coin dealer or somewhere like that. But when you're trying to buy something which is in silver form, that's the closest you're going to get to silver. But as you start to collect coins, and as I found over the years, little by little, I start to pick up older coins or special coins of collections, and that can be quite fun. And it's actually quite fascinating if you can find a nice collection to build up. One collection which I like are the Australian Lunar collection. They run in a series of 12, one coin per year, and we're now on the third series of 12 coins. So each year they bring out a silver coin, well, there's gold too, with one of the lunar animals or for the relevant year. And if you look around bit by bit, you can build up your entire collection. It's great fun trying to find the missing pieces to a collection. But of course, if you want to buy the older years, they've already found their way into relatively firm hands, and they're going to be a little bit more expensive. But sometimes these things will just turn up and you get a bargain. And I'm going to give you one example of when I found a bargain in the Lunar collection. I had quite a few of the Lunar coins, but I was Googling around on just on eBay, and I saw that there was a coin dealer in America who had got like 20,000 sales in the last year. So big dealer, all 5-star sales. So obviously very reputable. And he had to buy it now for a 10-ounce rabbit from 1999. The rabbit is a rabbit coin. 10 ounces is a big coin. And the price, I think at the time, was something like $287 buy it now, or $285 buy it now. And that was it was above the silver price at the time, because I think the silver price was around $20 or something. But for the 1999 coin, that was the rarest of the 10 ounces. The mintage was very low. It seemed to be a very good price. We had been looking for that coin for a long time, and it wasn't available anywhere. And I reckon it must be worth $600-700. So seeing it for sale at $285 plus the postage, which brought it up to nearly, well, let's call it $350 with the taxes as well. I had to pay Swiss taxes as it came in. It was still a bargain for me. So I immediately did the buy it now, and the coin duly arrived. I was very happy with that. But I was trying to figure out how this coin dealer had mispriced the coin, because others in later years came up and they were priced at a much higher price. And I think what had happened, this dealer had probably got one of these coins in from somebody who had brought it to his shop, and he'd said to his assistant, look it up on eBay or wherever, see what it's worth, and add $100 and sell it for that. So probably what the assistant had done, he'd typed in 10 ounces of silver, and unnoticed to him, the 1/10 of an ounce coin had come up, which was selling for about $100-150. So the assistant had probably just added $100 to the 1/10 ounce coin price and put it up there. And I managed to buy this rather valuable coin at a very good knockdown price. Obviously, I don't feel any sympathy for the dealer. He's as I say, he's got 20,000 odd sales of coins. He knows what knows what he's doing. But that was a rather lucky buy. So just a comment about how you can approach buying coins. I think you've just got to look everywhere. If you obviously looking on the auction sites, eBay is a good place, but there's many other auction sites around the world. Here in Switzerland, we have something called Ricardo. There's a lot of silver coins on Ricardo, and some are sort of buy it now with a high price, and some are no minimum, and you can bid on them. And sometimes you just get lucky.
Yeah.
But another thing which I think is quite interesting is to pop into jewelers' shops, secondhand shops, street markets, and see what turns up. A few weeks ago, about 2 months ago, I was in a street market here near to Geneva. They have one market a month, And it was about 3 o'clock in the afternoon. They probably get about 10,000 visitors to this street market. And I'm walking around the stalls. There's a large number of stalls. You can spend the whole day there if you want. And there's this lady with one of her stalls. She's got some jewelry. She's got some earrings. She's got some teapots and cups and ornaments. And there, sitting amongst the earrings and jewelry, there were 2 Swiss silver Helvetia coins, the 1 ounce coins, written 999 silver. And I said, how much do you want for the coins? And she said, 10 francs. I'll take them both. I know that the silver in them was worth 25, let's say 25 francs or something like that, 20 francs maybe. So clearly the lady had no clue what she was selling or what the price of silver was. But it's exactly the same market. I came across another stall where a guy had a couple of collector's books. He had 4 of them actually, of Swiss coins, the 50 cents, 1 franc, 2 franc, and 5 franc coins, all prior to 1967. So therefore, all the coins in the books were silver, and there were slots for each year. And in many of the slots, they had 3, 4 coins because the collector had obviously been collecting coins and he had them for sale. I said, well, how much do you want for the silver coins? And he said 3 times face value. Now, I wasn't actually sure what the face value of those coins was at the time, but I was pretty sure in my brain that it was more than 3 times. But I then took out my calculator and started doing the calculation, and I realized that they were worth about 3.8. The silver in them was worth about 3.8 times what he wanted, the face value. And today it would be over 4 times. So I turned around to him and said, I'll take the lot. And he went, oh, no. I think I better go and look this up, because he'd seen me typing away on my calculator and obviously realized I knew what I was doing. And then he realized he must have got the price wrong. So I think with hindsight, the tactic there would have been to say, when he'd said 3 times the price, for me to say, I'll take 5 of them and walk away, do my calculation out of sight, then come back and say, I'll have another 5, and then say,
Or
you
you
can take the rest.
or you could have said, can you do it for 2 times instead? Like
Exactly. Well, that would have been the other tactic, to say, I don't like 3.5 times, 3 times. Would you let me have it for 2.5 times and see what he said, and then we can do some negotiation. I didn't get any of those, and in fact, in the end, he said, "Come back in a month when I've had a look at the prices and checked it out." Of course, the coins weren't there the next month.
Rafi. Oh, sorry.
Right. So, three times. Well, if you take a silver eagle, for example, that's a $1 face value, and it has a value of about $29 or whatever silver is. So that's 29 times face value just at spot.
Yeah.
So, the chances are 3.5 times will be very worth the price. Well, about getting coins. I just had an experience where this Hasidic guy who works with a group of Germans who actually live near me, who want to import gold and silver into Israel for the purpose of rebuilding the temple. This isn't a joke. This is what they're trying to do. So they found me and they talked to me, and I don't really, it's kind of awkward for me to talk with Germans because the language makes me nervous, but they know that, and we kind of laugh about it, and it's somewhere in my blood. It's just not comfortable for me. But anyway, like he was with them, and this Hasidic guy, and so he calls me up, and they were having this conference with other Germans. I guess they have some kind of a Holocaust complex where they feel guilty and they want to help, or something like that. I don't really understand it. But so one of them just gave him a 1/4 ounce Kaiser Wilhelm II 1894 gold coin. And so he calls me. He's like, Rafi, do you want to buy this? So I'm like, so I calculate the spot price for a 1/4 ounce, and I was like, so how's XYZ amount of shekels? And he's like, yeah, sure. So I was able to get the coin, a 1/4 ounce coin, for a spot, because there's no real market here in Israel, and I'm the only one he knows who's going to buy it from him. So I just gave him the spot price. I thought that was fair if he's got no one else to buy it. So if you're in a country where there's very, very where there's not much of a market and people don't really understand, then you can, just by having a reputation, you can get good prices because people
Yeah,
just want cash and they have no one else to sell it to.
yeah,
And the thing is, like, when the market finally does gel, because people will have no use for the dollars or the shekels or the Swiss franc that they're using because it won't be worth anything, then people will start doing the research as to what this thing is actually worth. It doesn't mean there isn't a market. It means that people aren't willing to invest the time to get to know what it is. So that knowledge that you have, you almost have a monopoly on it, and it's worth something. So every so often you'll get those deals.
yeah.
Yeah,
Just a sec. Sorry, Clive. There's a super chat here, and Chris Conman, thank you. He says, in general, how do you think annuities will fare in the market downturn or 30% crash or more? And after the Fed cuts rates, when do you think the effects of it will show up in the CPI? Thanks. Sorry about that, Clive. It's just that he put that up there quite a while ago. Uh, and it's weird because I was thinking of annuities the other day, and annuities are kind of an interesting investment in that you put your savings in an annuity and it pays a fairly good rate. And recently here I saw an article in the UK that annuity rates have gone up a lot and it pays you for life. And if you die, you lose the money and it doesn't go to your spouse or family. Any view on annuities, Clive, before we
so
switch
yeah,
back
so
to
if you
silver?
if you are fairly elderly, and that would include myself at 67, but probably even older, um, you could live like a king if you buy like buy an annuity, because they assume they're only going to be paying out at, let's say, for the next 10 or 15 or 20 years, whatever their calculation of your life expectancy is. If you happen to live longer than the average, you've got a good deal. And if you live shorter than the average, you've got a really bad deal because there's nothing left for your heirs. But if you don't care about your heirs, well, you're certainly going to live much better than you would if you put your money into savings bonds, because your saving bonds are going to be paying you in dollars, let's say. Now it's only 3.8%. But if you buy the annuity and they reckon you've got 10 years to live, then they're going to be paying you that 3.8% plus 1/10 or maybe 1/7 or 1/20 of the amount of the capital you put in. So that might well add another 5 or 6% to the amount you're getting. So you might well end up with more than 10% a year coming to you. But you have to realize you can't get the capital back. It's gone. You've handed it to the insurance company, and when you die, your heirs won't have anything left, at least not out of the money you put into the annuity.
And how do you think it would work in if there's a crash?
Well,
Like,
the annuities are largely paid out by the insurance company investing in government bonds. I mean, they'll have other things too, but they'll be largely government bonds. So a lot will depend on what happens to the value of those bonds. But if we're talking about a fiat-based annuity, not inflation-linked, well, they're probably, the books are probably balanced. They'll probably be able to pay you. Even if the government bonds go down, they probably have sufficient other assets to keep paying. Because don't forget, they're not paying it out all to you in one go. It's stretched over your entire life in slices, and they will have a certain amount which is very, very liquid and others which are long dated. One could imagine in some very extreme circumstances that if the bond market was to collapse big time, then they might become insolvent because their liabilities to pay you might well exceed the value of the assets they're holding for you. But I don't see that as I think there's bigger. The insurance companies have other dangers. But I think on the annuity side, I don't think it's that. I don't think that's the source of the problem at all. I think the bigger danger is the source of their assets. Are their assets large enough to meet all their liabilities? And bearing in mind, the companies which pay annuities are also insuring all kinds of risks. If you have some kind of situation where the number of claims is much higher than they expected, and the stock markets are down and the bond market is down, well, then you end up with some bankrupt or insolvent insurance companies, and not everybody will get their money. And if you're an annuitant of one of those companies, you have a problem too.
Rafi, any views on annuities?
Yeah, I'm not gonna bet my. I'm not gonna put a bet on my own life expectancy. So that's
Yeah,
something I want
I,
to do. And
sometimes
yeah,
it's just better to spend your capital. And
Yeah.
because if you die, your family will have it. One thing I read about the hyperinflation in Germany is that people who had any kind of like life insurance, annuities, and bonds, they were wiped out. So keep that in mind. If the Fed comes out with the other central banks after the next downturn and prints to high heavens, yeah, you could see the currency collapse. And I think the best annuity is to stack gold and silver, really. But you might want to put some stuff in an annuity. I mean, but that's up to the individual, and it depends how old you are as well. Uh, Dmitry Shmerkovich, thank you for your super chat. He asks, do you think the Fed is targeting a certain percentage spread between US and Japanese 10-year bonds? I personally don't think they are. Because yeah, I think it's just the Japanese that are trying to keep the JGB yield as low as possible. I think they're trying to keep it below 1% right now. I think yeah, I don't think the Fed targets that kind of stuff. I might be wrong. Um, uh, Clive, do you think
I think the Fed is definitely talking with the Japanese central bank for sure, but it doesn't mean to say the Fed is going to do anything to please the Japanese. I think it's more they want to make sure the Japanese know which way the wind is blowing from the Fed's point of view, so that they can adjust their rates and not collapse the yen or totally destroy the economy. But I think they're leaving it up to the Japanese, the BOJ, that's Japanese, the Bank of Japan, to make their own policy, but with the benefit of knowing what the Americans are thinking in terms of policy. But that's a fairly, what the Americans are thinking is also a fairly open process. We all know what they're thinking because they have these regular updates from the Federal Reserve as to which way the wind is blowing.
Rafi? Any?
Yeah, I don't like Clive. I don't think that the Fed has a policy to control 10-year Japanese interest rates. But if you take a step back and look at I guess the monetary love triangle, you could call it, between the US, Japan, and gold, right? The Japan owns the most amount of bonds, most amount of US treasuries than any other country. So the Bank of Japan has a lot of leverage over the Fed. And at the same time, the Fed has a lot of leverage over Japan because they have the reserve currency and Japan doesn't. And then at the same time, gold has leverage over both of them because both the yen and the dollar are dependent on gold to have any value. So in the end, both the Fed and the Bank of Japan are going to lose and gold's going to win. That's all you really have to keep in
I mean,
mind.
Japan's got a bit of a problem at the moment because they're trying to fund ever-growing deficits because they got this aging population, and at the same time, they don't want the Japanese yen to collapse, but it has been collapsing until it rallied recently. But if they put up the interest rates, it'll only exacerbate the debt problem. It get much worse because of the interest rate on the debt. But if they keep the interest rates low, it'll encourage the currency to decline even faster because nobody wants to own a currency which has got a zero interest rate when you can get so much more everywhere else on the planet. So I think there's a bit of a problem. The Japanese financial situation is a bit of a problem. They're running a bit of a tightrope to try and keep the system afloat, stabilize the fall in the yen, but raise interest rates if they can, but not raise them so much that the government can't afford to pay the interest anymore.
Yeah, talking about the yen, I'm going to bring up a chart here of the dollar versus the yen because I think it looks really doesn't look very good for the dollar, i.e., I think the yen could go up further. Let's see this chart here. So this is yeah, this is when the yen dropped to like or the dollar went up to 162 back in July. So there's a lot of talk, the Japanese need to do something because the yen is weakening too quickly. And they raised rates and they said they're going to uh, taper their QE. They're still doing loads of QE, and the dollar started dropping massively. This was August 5th here when the Nikkei dropped 13% and then the dollar rebounded, but now it looks like it's keeling over again. It looks like a bear flag. And I've calculated this flagpole here, and you put it here, and it gives me a target of 127. That would be a huge drop in the dollar and a massive rise in the yen, and it could revive all those problems we saw for the stock market back in August, beginning of August.
So if we look at the dollar since the beginning of July, when it was at a sort of peak, and I'm looking at the DXY, the dollar index. The DXY is an index of the dollar versus a basket of overseas currencies. It's been declining since the start of July. It was about 106 at that time, and now it's about 100. Well, it actually went down a lot yesterday on Friday after Jerome Powell had spoken, because people saw his speech as dovish, meaning they're going to lower interest rates and more than people had previously been expecting. So the dollar, it dropped by, I think, about 1% on Friday. We're down to below 100. We're down below 101 now. On Friday when we spoke on Friday morning, Mario, I think we're about 101.5, but we're now below 100.
Yeah,
Not below 100, below 101.
yeah. And I mean, I think the dollar index, the biggest component is the euro. But after that, it's the Japanese yen. Let's have a look here. Wikipedia. Uh, I think they give the weightings. So yeah, Japanese yen, 13.6%, quite a big weighting. The euro has such a big weighting because it's got all the different countries added together. So I'm not sure why the pound has such a big weighting. And anyway, Rafi, any? Oh, your microphone is off.
Regarding the dollar index.
Yeah, and the yen. Do you think? Do you agree with me that the dollar doesn't look very good, and it could affect the stock market as well?
Well, yeah, I mean there could be a bounce here because it's been going down for quite a while, so we're probably gonna have a technical bounce as shorts cover. But the question, I don't really know how to answer this, but what's going to go down first? The yen or the dollar? I mean, I expect the yen to be very, very volatile as it goes through its death throes. It's gonna, I mean, these movements in the yen in any currency is not natural, shouldn't be happening. But they're going to keep happening and they're going to get worse because the Bank of Japan balance sheet, and therefore the yen itself is so stuffed full of debt, more than any other currency has ever been in the history of economics. So the question is like, what happens first? Does the yen strengthen and the dollar weaken, and the dollar weaken and the yen strengthen, and what falls first? And I think the answer is the yen falls first, and and then the dollar falls second. But really, because I might be wrong on that, because the yen owns so many treasuries, or the Bank of Japan owns so many U.S. treasuries, the two currencies are pretty much tied together, you know, so they could just fall simultaneously. And what would that look like? That would look like nobody really caring what the dollar yen exchange rate is, and both of them just going after gold, and then both currencies falling versus gold and silver at the same time. And
Hmm.
then the
Yeah,
exchange rate doesn't
so
really
when
matter.
when currencies fall in value, it manifests itself in terms of rising prices. So obviously it would be things like gold, but it would be across the board.
Yeah.
You know,
Yeah.
the cost of living would be rising because the currencies themselves are worth less and less.
Yeah. Matthew Miller says, on the topic of Irwin Schiff, are you familiar with Joseph Bannister, former IRS agent who won a court case, no obligation to file a tax return? I think, yeah, I think Aaron Russo spoke about this in he made a documentary about 20 years ago, which was actually quite prescient. He said, America from freedom to fascism. Aaron Russo, the guy who directed, he was the director of Trading Places. He's passed on. And
The movie,
yes, sorry.
the Trading Places, the movie with Eddie Murphy.
Yeah,
Uh,
Aaron Russo was the guy who directed it, and he made this documentary, America from Freedom to Fascism, and he interviewed, I think, Joseph Bannister, and this guy said, legally, if you don't file your tax return, they can't come after you. The problem is when you file for the first time, then you're hooked. You're hooked onto them. And the same thing here in the UK, but it's difficult because employers they make you sign on to national insurance here when you're employed, and also in the US into Social Security. So there you go. Um, oh, here's a question from Carlos Garcia. Opinion about the libertarian Milei sent Argentina gold reserves to the Bank of England. Remember, he was going to eliminate Argentina's central bank. Uh, yeah, it's disappointing. I think he came out 2 years ago before he even became famous. I think he was elected to a post in the Argentine parliament, and he said, "Oh, I want to abolish the central bank." He was supposedly an Austrian. Yeah, it is disappointing. He's done a lot of stuff in Argentina that has helped. But yeah, I'm not sure why he sent Argentina's gold to the Bank of England. I see that his Minister of Finance is an ex-Deutsche Bank and JP Morgan banker. So maybe that's why. Don't know if you guys have heard about that, Rafi or Clive.
I heard nothing about that.
I didn't hear about it, but my approach with Milei is he can't just do everything that he wants because he still has all these parents to deal with that are dependent on the state for their income. And if he just cuts them all loose, they'll have an army of zombies come after him and maybe kill him. Uh, so I think he's really trying to do as much as he can. And what the best we can hope for is that he doesn't get forced to go down the socialist path to the point where he loses focus on what he's trying to do, and that he can get sucked into it and then just tell himself that he has to because this is the best that he can do, and then he looks more and more socialist. He has to have his red lines and be willing to lose everything. I just don't know where those are. But then again, I can't expect any leader, even one like Milei, to just do exactly what he says immediately, even though that's what I would want him to do.
Yeah. All right, guys. I think we're out of time. Um, Yeah, to the viewers, thank you for showing up and all your questions and participation, all the super chats. Just wanted to tell you that tomorrow morning I'm not gonna make my daily video because I'm gonna go play golf because it's a holiday here still. Not that it matters to me, but I'm gonna go play a swindle. But I'll probably make a video later on in the day. And if you want to connect with Rafi, you should go to YouTube uh, at Rafi Faber or Endgame Investor. He's also on Substack and on Seeking Alpha. Clive is on LinkedIn if you want to connect with him. Clive Thompson. He will try to answer questions for you. He's not a financial advisor. And yeah, Clive and Rafi, thank you for being on. And any final words to the viewers?
Well, I think first of all, we don't know as you said, it's not financial advice. We don't really know the future. We've just got an idea of what we think would happen, and more importantly, how to protect yourself against the kind of disasters which could befall this world. And so that's the reason I think it's a good idea to have some silver and gold in your possession. Even if you're expecting things to carry on as normal, you never know. Your house might burn down. I mean, that's why you take out insurance, and having some gold or silver is a form of insurance against the disasters.
Yeah, Rafi?
My last words are the enemies that we have are not all powerful, and don't imagine that they are. They'll pass too.
Good point. Great. Thank you, guys. And Rafi,
Right, all.
all the best and keep safe. Take care.
Good night, guys.
Good night.
Good night.
Good night.
Okay, hopefully I won't be waking up at 4:30 a.m. going to a bomb shelter, and I have a nice good sleep.
Yeah, good luck
Yeah.
to you, Rafi. I hope that will be all right. I do worry about